In tonight's video, I'm going to be answering one simple question. Do the convertible bonds put a cap on how high GameStop can run? This was asked to me in the Discord a couple days ago, and we have covered it before when the convertible bonds have come out. We've covered all of the complications with it. But in short, no. No, it doesn't. And I'm going to explain what it actually does for GameStop when we get to specific levels. Watch until the end. I'm going to try to make this video under 8 minutes or so. So it should be a quick one. But first, take a look at this. I want to cover this very quickly. Safe and Green Development Corporation, SGD, is a sponsored stock for today's video, but it had a 3,200% revenue growth to 1.4 million in Q2 of 2025. And that is not actually the impressive numbers that we are getting with this play. Institutional ownership is also jumping to the highest it's been in over a year this December, and the stock is trading at $1.16, gaining legs, gaining some momentum, has some buy targets, and this is what they claim that they are over on their website, but I'm going to explain the actual hype behind this, and I'm going to try to keep it short, sweet, simple, to the point. They're a leading national real estate development company that focuses on the development of sites using purpose-built prefabricated modules built from both wood and steel, sourced from one of Safe and Green Holdings factories. The firm strives to generate value via development sites made with high quality products through sustainable methods, with a mission of efficiency at the forefront. Now, recently, take a look at this. Today announced that a new customer and large U.S. distributor of branded chemistry products serving specialty agriculture markets has issued multiple purchase orders for wood fines produced at the company's Mayaca, Florida site. Now, this was November 25th of 2025, and we have some important catalysts that this company has alongside it gaining some legs and being picked up. First of all, I'll link their website in the description down below. Go check it out if you want. Again, this is ticker symbol SGD. It is trading at $1.16. Over the past few months, the company has pivoted into a full environmental solutions and green infrastructure business backed by real assets, real operations, and real revenue growth. They just had a major acquisition that was closed. They acquired Resource Group, which has a permitted 80 plus acres of organics processing and engineered soils operations. This gives them composting, green waste processing, logistics, and soil substrate production under one roof. After bringing Resource Group in-house, their quarterly revenue ended up jumping even more than what I showed you from Google, jumping from tens of thousands to $3.5 million, marking over 4,000% year-over-year growth. Actual operating momentum. Actual revenue for the company, jumping up over 4,000%. Now, SGD is also rolling out new industrial milling and grinding systems to produce engineered soils and growing media. These products typically command stronger margins and recurring demand across landscaping, agriculture, and environmental projects. The company recently retired their outstanding convertible debt as well, which is coincidental to what we're talking about in today's video with GameStop. They removed a major overhang and it gives them more flexibility to scale. Plus, 2026, with production expanding, new contracts are expected and multiple revenue streams are also expected. And this one revenue stream that they ended up getting that was perfect increased 4,000% year over year to their revenue, and they have more expectations for 2026. They have a very good foundation coming into the new year. Let me know what you think about this company in the comments down below. I am very curious and interested in it, and their website looks very, very clean. It looks good what they're doing, and the way they are doing it is very smart for a company trading at $1.16, in my opinion. Again, nothing I say is financial advice. I'm not a financial advisor. Do your own due diligence on everything provided in today's video. The links will be in the description down below. Okay. GameStop announces pricing of private offering $1.3 billion of convertible senior notes. If you don't know, GameStop offered convertible bonds several times, and people are wondering if that puts a cap on the squeeze. And my short answer is no, which I gave you at the beginning of the video. We have seen GameStop stock price build out a beautiful setup that we saw back in April coming into May of 2024. We're seeing the same setup now, and the question lies, will this cap the squeeze? Here's what I have in front of you, and this is very important because we have a conversion price for the first set of convertible bonds, which is at 28.91. Then you have a conversion price of 29.85 for the other convertible bonds. Okay. Now, there is a stipulation in the filing for the convertible bonds that the stock must be trading plus 130% of the conversion price in order to be converted. And it has to be trading above that by 130% for at least 20 out of 30 trading days. That is a key point. That means if there's a window of 30 trading days and the stock trades 19 days above 37.58 or yeah, 37.58 or 38.80, and it drops below and it's under the threshold for 11 days or whatever, then they can't convert. So it's a key factor. Why did we get a huge rejection back in May? This is going to coincide with my answer. We got rejected perfectly. You can see this with a closer look. Look how perfect this was. We got rejected at 37.50. If we got to 37.58, the stock might have went parabolic. And let me explain that. You see, I actually believe that the convertible bonds will do the exact opposite of keeping the price down. And why it will do that is because of several market mechanics that are actually happening. You have ones that are long bonds, but then you have the same ones who are long the bonds, short the stock. So the bonds, as along with the warrants at 32, which is the yellow line, are worth 203 million shares. That means that where we're trading at right now, there's about 203 million at minimum likely shares or somewhat shares shorted, or at least 150 million. When you get above the warrants, there likely will be 203 million or so. So what does that mean? That means as the price bids up, this is actually where it gets interesting, right? As you get closer, like you saw here, to the conversion price, they try and knock the stock down. And that's exactly what they did. But there's a lot of mechanics to it, and it's not just the convertible bond holders who are hedging. This also has to go with market makers. Market makers had a lot of retail buying very far out of the money call options. They end up having to buy shares on the market in order to possibly fulfill the obligations, aka stay delta neutral. And all of that sounds complicated, guys, but it's very simple. They play both sides. They play both sides of every single situation. So, long story short, if you didn't take in any of that, all it means is that if the stock, we're at $23 right now, if the stock comes over 28.91, 29.85, there will be more aggressive shorting, okay? And that doesn't mean we stop there, because market makers can still let this thing run. There can still be gamma ramping happening. However, this is where market makers panic when you get close to the 37.50. And it's not just market makers, so don't get me wrong here. This level up here at the 37.58 and 38.80 is what I would like to call the tripwire. If at any point GameStop gets above this, you should see a parabolic squeeze higher. This is all in my opinion. And people talk about the dilution. But there's a couple of things to note. First of all, when shares are able to be converted, when mechanics happen like this, when they're engineered like this and they're able to be converted, it doesn't happen immediately. For example, if we're squeezing, that means that there's not going to be immediate dilution that will tank the price. Plus, most of the time, another thing people don't talk about is these bondholders will probably take cash. They'll probably take cash. It's way too risky to take stock, wait to get that stock, see where the price is at, and then try to sell it. Okay, a lot of big money doesn't do that. So that's important to note. This level between 37.58 and 38.80 is a huge tripwire for a parabolic squeeze higher. The main reasons are that all of the $203 million worth of shares that are winded up in this coil beneath these prices, end up having to flip. Okay, so down here they're short, up here they're long. Okay, down here they're short, up here they're long. Now let me do something here. Down here, they're less short. Up here, they're more short, right? More risk, less risk. Up here, they're long. That is completely flipping long. So you have a huge tripwire that, number one, market makers avoided. Why did market makers avoid that tripwire? Why wouldn't they want the stock to run? All the retail that had the far out of the money call options, okay? As it bids up, market makers aren't going to profit off of that. Retail is. And that's exactly why they wanted the price to tank. Collect all that good premium and stop delta hedging by buying the underlying stock, right? There's a lot of mechanics. Plenty we didn't cover. Plenty that you and I can't wrap our heads around. Probably. Unless we wanted to spend the time to do so. But long story short, I don't believe it will cap the squeeze. I think it will do the opposite. However, I do think it will possibly be a little bit harder to get up to those levels. But if we get to those levels, and again, there are other mechanics that wind up wanting to push us higher to these levels, right? In fact, there is actually an underlying secret to this trap that I believe Ryan Cohen set up, and it's that it pins funds against funds, institutions against institutions, positions against positions, and that's why you see these hard moves. It's one reason why you see these hard down moves and these aggressive up moves. Okay, very much a reason, and we have that in our videos somewhere. The trap Ryan Cohen set, I believe something it's called. Ryan Cohen is genius, 4 shorts trap. I highly suggest you go watch this. Okay, Prisoner's Dilemma. Go watch this right now. Has 7.2 thousand people, 7,200 people liked, watched this video. I don't even know how many likes this video has. 483. See, that's what I'm talking about, guys. You gotta like the videos. I don't know why people don't like the videos. I have 2 links in the description. One is for my Discord and one is for my custom indicator. Make sure to join the Discord and make sure to check out SGD stock. This is a very, very interesting one with huge year-over-year revenue growth that is finally building a bottom on the stock. Also, only a 10 million market cap. So if you guys end up moving it, again, I can't tell you what to buy, hold, or sell, but if you guys end up moving it, it will move very, very quickly. So be careful trading these volatile plays. But it could be an early one. Institutions are continuing to add back into it. That is it, guys. I love you all. God bless. Lottery Stocks out.